Hey guys, welcome back to the channel. Tom here. Today we are going to be talking about Bitcoin. What's going on with Bitcoin this year? Are we nearing the end of the bull run? Are we in a big bubble that's just about to pop? Or are we still near the beginning and has Bitcoin got a long way to run? Now, Bitcoin is the best performing asset of the last 10 years with an average annualized return of 230%, which is crazy. Like, nothing can get close to that. And you can see why there's so much exciting around this sort of emerging technology. There's still a lot of critics that say it is in a giant bubble and it's not worth anything, it has no inherent value. But there's a lot of people that believe the exact opposite. And in fact, the Lindy effect, which is a theory that says that the longer that a technology is around, the longer its life expectancy. In the last 10 years, Bitcoin has come up against some huge obstacles and has always proved itself and come out on top. But recently there's been some slightly negative news about this current bull cycle. We're going to have a look into that shortly and also into some really positive news. And you guys can decide, what do you think? Do you think we're nearing the end of this bull run, or are we just getting going? Now let's dive in and have a look at some of these articles. Bitcoin's rich list shrinks amid continued price rally. Sometimes referred to as Bitcoin's rich list, the number of unique addresses holding more than 1,000 BTC has shrunk by over 8% since February 8th, according to the data provider Glassnode. While addresses have been selling, market analyst Lark Davis tweeted, this does not mean the bull run is over, it just means profit taking is happening. Now, there's a lot of people concerned about this. They're saying, why are the whales selling out? They've been on a consistent uptrend now for quite a long time. This is the biggest drop in terms of percentage drop we've ever seen. But you've got to consider this, the price is at an all-time high. By far, the previous all-time high on the last cycle was $20,000 per Bitcoin. We're now up to $60,000. So that's like 1,000 Bitcoin going from a market cap of somewhere around 6 or 7 million to now being worth more like 60 million. But while we're talking about this, let's have a look at this graph. So this is the graph, the gray line is the Bitcoin price and the orange line is the number of addresses holding 1,000 Bitcoin. So as you can see that in the last couple of months, there's been that significant drop off. Down the amount of people holding that many Bitcoin. But there's a couple of good reasons that I think this could be happening. Now, first, you've got to consider that the price of Bitcoin's gone up 600-700% in the last year, so there's going to be some profit taking happening there. Also, there's going to be less people accumulating 1,000 Bitcoin because the price is so high now. That's quite a big hurdle to have 60 million to be able to invest into Bitcoin. Also, you've got to consider that people are going to split their Bitcoin up. As it becomes more valuable, they're going to want to split it into more addresses to limit the risk of getting hacked or anything else. So I think there's some good reasons there why this is happening, and it's not a major thing to be concerned about. It's worth keeping an eye on and see what happens with those addresses over the next few weeks. But let's move on to some more positive news for now. Bitcoin is too important to ignore, Deutsche Bank report. So what have Deutsche Bank been saying about Bitcoin? They're obviously a very big international bank. Bitcoin is now too important to ignore, given its $1 trillion market capitalization, according to a new report by Deutsche Bank. The report published Wednesday states that the price of Bitcoin could continue to rise as long as it attracts entry from asset managers and companies. However, the cryptocurrency is expected to remain volatile due to limited tradability. Now, that's interesting, and I think there's certainly a lot of interest going on with Bitcoin and cryptocurrency in the institutional space, and we can have a look at a few more articles that are going to show this. So next up, SEC publishes VanEck's Bitcoin ETF application, kicking off the decision clock. That means the SEC has 45 days to approve or deny the application, and which would approve the first ever US Bitcoin ETF. Now, one thing to consider is that this has happened many times in the past and they have always denied it. However, a lot of people say there's a lot more reasons to be positive this time around. Things have changed. Bitcoin's market cap is significantly higher. It's been adopted by a lot of institutions and larger corporations out there. And on top of that, we have other ETFs being approved in countries like Canada. And Gary Gensler has been elected the head of the SEC, which people see as a very positive sign. He understands the technology and he understands the importance of it. So we don't know what's going to happen. And also, this can be delayed for up to another 240 days. So this could take a lot longer. It's not necessarily the beginning of the end, but it's a step in the right direction. Despite recent volatility, Bitcoin supply is still drying up at astonishing rates for this time around in the bull cycle. Now, this is more data by Glassnode. As you can see on this graph here, the green and the red show increasing liquidity and decreasing liquidity in Bitcoin. Generally, towards the end of a bull market, you start to get an increase in supply as more people want to sell and less people want to buy as the price rises. But as you can see at the moment, we're down at almost all-time lows where there's just not much liquidity. People are buying Bitcoin and holding on to it. And this is a really positive sign for the price. Next up, Morgan Stanley introduces Bitcoin investing for millionaire clients. Now, this has just been released this week and this is huge news. So let's have a look. Institutional banking powerhouse Morgan Stanley seems to have given Bitcoin its nod of approval. Based on fresh intel via an internal memo, as reported on the CNBC, Morgan Stanley will give clients access to Bitcoin investing, although only under specific conditions. The investment bank, a giant in wealth management with $4 trillion in current assets, told its financial advisors Wednesday in an internal memo that it is launching access to 3 funds that enable ownership of Bitcoin, according to people with direct knowledge of the matter. The opportunity is expected to open in April, according to sources. Bitcoin interest from mainstream finance has risen significantly over the past year, with players such as MicroStrategy, Tesla, and Square buying large stacks of BTC. Now, one thing to consider, this is obviously huge news. Morgan Stanley are a huge institution and they have $4 trillion in assets. So even a very small percentage of that money flowing into Bitcoin could be big for the Bitcoin price and for the whole cryptocurrency space. But there are some limitations. Clients must also carry accredited investor status, hold capital at Morgan Stanley valuing $2 million or more, and maintain a certain account history. That minimum raises to $5 million for investment firm clientele. Each fund also comes with minimum investment conditions. Now, I don't think that's too much of a worry. There's plenty of clients at Morgan Stanley that fulfill that criteria. Either way, it's a step in the right direction. The more of these big institutions, big banks that are adopting cryptocurrency and giving access to their clients, the better it's going to be for the space. So how about a current price prediction? Let's have a look at stock to flow. The stock to flow ratio is used to evaluate the current stock of a commodity, which is the total amount currently available, against the flow of new production. That's the amount mined in a specific year. For store of value commodities like gold, platinum, or silver, a high ratio indicates that they are mostly not consumed in industrial applications. Instead, the majority is stored as a monetary hedge, thus driving up the stock to flow ratio. A higher ratio indicates that the commodity is increasingly scarce and therefore more valuable as a store of value. Now, Bitcoin can be analyzed in this way because we know the exact amount that is mined. Unlike gold, where we don't know if we're going to find more or how quickly it can be mined, it changes. With Bitcoin, it's scientific, it's mathematical, it's laid out in front of us, so we can predict exactly how much Bitcoin is going to be mined every day, every year. So this stock to flow model shows that, and so far the price action has stuck almost exactly to the prediction. So now let's have a look at this article that talks about it. So Bitcoin has plenty of room to grow in its current bull run and will not stop at $100,000, according to analysts including Plan B. In various posts on social media on Wednesday, the stock to flow Bitcoin price model creator joined others in predicting huge all-time highs for BTC. With Bitcoin trading sideways below its recent peaks of 58,000 and 61,000, investors are curious about where the 2021 bull run may end. As Cointelegraph reported, depending on the price indicator used, the peak could be uncomfortably near or still far off, as we've discussed already. But for followers of the stock to flow, the answer remains firmly the latter. Compared with previous bull cycles, 2021 is just getting started. We're only 3.5 months into the Bitcoin bull run, Plan B surmised. He referenced both his stock to flow, or the S2F, and the stock to flow cross-asset, or S2FX models, which gave an average BTC price forecast of $100,000 and $288,000 during the current halving cycle, set to end in 2024. This is just the average, however, and Plan B believes that the peak of this cycle could be double those figures, or even more, potentially in the excess of $500,000. So I think a lot of reasons to still be bullish and excited about Bitcoin this year. And when you think about it, MicroStrategy's event was just last month, where they hold a 2-day virtual conference to share their playbook of how to buy into Bitcoin and cryptocurrencies with corporate treasuries. Now, 1,400 corporate leaders attended that event, and these kind of companies can't turn around and buy thousands of Bitcoin the next day. They're going to have to go through the layers of bureaucracy and red tape and board approval. So I think we're going to start to see the money from those companies flow in the coming months, and I think we've got quite a way to go yet with this bull market. So I hope you guys enjoyed that video. Any news, I'll keep you updated. If you did like it, I'd really appreciate it if you could hit the like button, because it really helps with the YouTube algorithm and helps me to keep making these videos. But anyway, I hope you enjoyed that, and I will see you in the next video.